to the Trading Market Technicals Morning Call video for Thursday, June 13th. The selling continues. Dow down 126, NASDAQ down 36, S&P down 13, Russell down 9. Now, this is all, and the fact is, again, the yen. It's all about the yen. Yen actually continues to gain strength while the equity markets take the risk off. Equities and commodities, currency markets as well. So we have broad-based selling across the board. Worldwide markets are selling off as well. And this is kind of a reason when you have worldwide markets. So you get weakness in the pre-market session. The market gaps down. So it really, risk-wise, to getting short in the hole, so to speak, is not the right thing to do. So you wait for a little bit of a bounce and the market starts to roll over without you. And that's just the frustrating part of when you're day trading, obviously. So you got to look for the best setups, and sometimes it's still quiet, even though the markets are picking up a little bit of steam. However, we are getting volatility, which is great for us, and doesn't matter which way the markets go. For those of you who are positioned short, congratulations, hats off. And those of you who are long, hopefully you are buying protection. Protection was very, very cheap weeks ago, and actually months ago too as well. And I keep saying I'm a big advocate of buying protection. It's well worth it if you're holding a lot of stock in your portfolio. If not, then you just got to ride it out. Nothing goes straight down and or straight up. So in that, what I want to say is that we are oversold. If you look at the NYMO, right in front of you, you can see that we did get that bounce right to that 20-day moving average, like I mentioned, and we then rolled over. I didn't think it was going to be that fast. I was looking for maybe 1 or 2 day consolidation, building some sort of a base, and then fail, and then retest the low. So we are down again this morning in the pre-market, down about 8.5 handles in the E-mini in the electronic session, again due to the fact we have a stronger yen. Nikkei was down 400 in the overnight, and a lot of the commodity block currencies are also down with it. Gold's also down as well. So we do have continued selling. Now, we have been down 3 days in a row. We are oversold in the shorter term charts, the 60-minute, 30-minute chart, and now even the daily. So I am expecting another bounce. I do think the next bounce is going to be telling if the market is going to regain its momentum to the upside. Now remember, if you look at the weekly charts and even daily charts, which I'm going to show you in a moment, we are still bullish. We are still in an uptrend. So technically, we did do some technical damage. We broke the 20-day moving average. Most of the indices are holding its 50-day moving average with the important sectors that we follow. And now we are looking at some bullish setups. We have bull flags across the board on a daily chart of the 5 sectors that we follow. Russell, NASDAQ, S&P, transports. So they're all showing positive bull flags here. Now, we have not broken out of the bull flags, and that only happens when we break out of the bull flags to the upside, and then you have a positive trade setup. But right now, we're still in a downtrend channel chopping around here, so we could easily fail, guys. So I would not be looking to get into that right at the second. Let's wait for a trigger, wait for a pullback, do it the right way, and you will get rewarded. Patience is key here in this market, especially now that you have some volatility, which is great for us. So anyway, back to the markets. I just want to say that I'm looking for maybe a push lower back into this area here, and then at one point today, I expect some kind of short covering rally again, back up into this area, maybe even close positive, follow through tomorrow with some positive movement to the upside, and then sell them again next week. Now, I am looking for probably somewhere of 6 or 8% correction here at one point when all said and done, when the market is done going down. I think that the markets are chopping around, and nothing goes straight down, so we'll have probably a chopping base formation, sell off, back up again, retracement, sell off again, take out that low, back up again, sell off, maybe in an ABC or an ABCD, 5 waves down. It all depends on the retracement rally. If there is some legs, do we have a lot of volume behind it, or is it just really a dead cat bounce where we can short into? And we want to short into resistance. We do not want to be shorting in the hole. And that goes the same thing with day trading. And that's why sometimes when the market's open deep into the hole, you really don't want to be shorting. The shorting opportunity comes only when you get some sort of a bounce. if you get the bounce. Sometimes they just chop around and grind lower all day, and the opportunity is gone. So just keep that in mind. All right, so let's look at the NYMO I mentioned here. The McClellan Oscillator is down here at oversold areas where we expect some sort of a bounce here. So keep that in mind again. Okay, now let's take a look at the bullish percent, SPX. No buy signal at all. As you can see here, when the markets do cross over, up and or down, we get a good movement. So this is a very good indicator, and I use it all the time. So we actually broke down lower again. So let's see what happens in next coming sessions if we get some sort of a buy trigger. Now, copper actually retraced yesterday a little bit, which is a good sign. Maybe copper stabilizing here in this little cluster area of support, 315, 320. But again, has a lot of work to do to get to the upside. Okay, let's take a look at the tick. Tick is still holding surprisingly above zero, but again, a couple of big flushes and we stay down this area. This is the end of day tick now, and if we break below zero and hold the zero line, then this is telling me that trend change is happening. Sentiment is changing. So, buyers of dips are trying to buy the dips here, and they're getting burnt. The guys who bought up in these areas up here. So, if they lose this area, the 1600. Then you're going to have stops that are going to be this area, stops that are going to be in this area, and then we could easily flush much lower. So that's when you get that train effect, boom, 1600 gets lost, stops get triggered. And now buyers of dips are getting much more nervous to buy the dip because it's not working anymore. Okay, now let's get into the Asian markets, the emerging markets, lower. Remember, I've been telling you this is very bad for the markets, very bad. When you have stocks that emerging markets that are breaking down, not leading, it's only going to be a matter of time before every other market start to roll over with it. The markets just cannot rally for too long without emerging markets and the other markets too as well. Shanghai, literally, this looked like some sort of inverted head and shoulders. If you had the bottom of the head here, you had your left shoulder, and then you had your right shoulder working. Now this is too deep here, really, to be a right shoulder, and here was your neckline right up here at 2250. Now this broke down, so this is going to catch the 200-day moving average this morning, no question about it. If it starts to break here, all bets are off to the upside in Shanghai. Now if you look at China, okay, China here at the lows, double bottom, critical area needs to hold. If it does not hold, now we are oversold, you can see this. We are oversold RSI and Stokes. But if we do lose this area and we start to flush lower, then I think the equity markets in the U.S. and worldwide are going to be in trouble. Now, culprit here is the yen. I showed this to you yesterday. We have two trend lines. Opposite correlation here. We have inverse correlated. We have the topping of the S&P, bottoming process of the yen, and now we're breaking out. Now, again, I don't expect the Bank of Japan that they invested so much yen, so much money into devalue their currency that they're going to let this thing go much higher. So at one point they're going to probably talk the yen down again, which would be a positive for worldwide markets. So again, guys, if you're trading during the day, I'd be watching what the yen does. It's going right now. It's basically almost tick for tick. Okay, so this is the culprit here is the yen, the stronger yen, and now we obviously broke above this area. This is an end of day, but this is actually going much higher now, so that's putting pressure on equities in the overnight session. Take a look lastly is the VIX. Now, this is a good sign that we may be bottoming here, because as you can see here, and I always said to you, 2 days out of the, we get a break out and a close back into the Bollinger Band. It's been a signal for years. We get a buy signal in equities, and we are outside the band now. Let's see if we break back out and then roll back down in here. That would put us a buy signal in equities as well. We are coming to some real big resistance here at 19. So let's watch the VIX, see what the VIX does. A break above 19 and fail to break below it. That's going to give us a buy signal in equities this morning. So we'll just keep an eye on it, but this is a real big indicator to be watching intraday. Okay, so let's take a look at our markets here. Again, failed to break above this downtrend line, and if you can see here, this is just a nice big bull flag forming in the S&P cash right up in here. You can see that here. Here's your flagpole. Okay, this is that uptrend channel that we've been looking at, but take a look at that again. A nice big bull flag needs to break out of this uptrend line though. This downtrend line before we get too excited to the upside. Again, same thing here, as you can see here in the spiders. Here's your flagpole, which would be your uptrend channel. Here's your bottom of your flag, and of course this downtrend line, which the markets need to break out of. Okay, and it's the same thing here, guys, in all the markets. So pattern recognition. Here's 60-minute spice. I want to just show you how oversold we are. RSI, MACD, stochastics. So we are oversold, and this is going to be basically a real big area. 160 area. 159.80, 160 is going to be your first big area here for this morning for a test and hold of the spiders. Okay, and again, diamond, same thing. As you can see here, we have a nice big a bull flag. Here's your flagpole, your uptrend line. Again, guys, same thing. Now, this here is a big area as well. We are holding this uptrend line from November of 2012. So this really needs to hold. And as you can see here, we held, and we held here again, and now we should be holding again. And we do have a good area of support right up in here at the 148.40 area. Okay. Now, the transport's a little different. We have a head and shoulders pattern that triggered. We broke down. We're holding a 50-day moving average. Let's see if this can break lower. If it does break lower and close lower and start taking out these lows, I think that's just going to fuel more selling pressure in equity, since this is our leader. Now, our secondary leader, which is the IWMs, is holding up much better, which is the Russell 2000 ETF. And as you can see here again, flag, pole. Here's your flag, which is your downtrend channel, chopping around lower. We did break this area here, but we have now the 50-day moving average, where the IWMs is is actually holding up much better than the other ETFs. Most of the other sectors are at its 50-day or near it, where the IWMs is not. So that's also a little bit of a little bullish at all if you're looking for something to cling on to. This is actually a little bit bullish here. So this is actually a good sign. Again, all of these patterns, as you can see, have bull flag patterns. Now, they have yet to break out to the upside. So that's going to be important in the next couple of days. And we may get a little bit of a dead cat bounce here today into tomorrow, since we are oversold. But again, oversold is not a buy signal. Remember that. It could be oversold for days. We could sell off today, tomorrow, and get some sort of a snapback rally Monday or Tuesday. So we just want to continue and watch this thing as this progresses, and take the best setups until we can get some sort of a bounce, and then get really aggressive here to the short side. Again, if that warrants it. Now, the Goldman Sachs here holding up pretty well above the 20-day moving average. Again, here's the XLF bull flag pattern, as you can see here. So many important sectors are showing bull flag patterns. Now, I think Apple's in trouble. As I mentioned to you before, this is just a day trading stock. We have broke and closed below the 50-day moving average. Apple's down 9 in the pre-market now. If Apple holds below this, you're going to get a test of these lows here, 418. I still wouldn't be buying at the 418 area. I'd look to see what happens, maybe for a dead cat bounce, stops below 418, but I think it does flush lower. There's really no products or nothing really exciting until the end of the third quarter, probably looking at start of the fourth quarter. So that's where Apple would be probably a better buy at that point. Right now, again, it's just really day trading, maybe 1 or 2 day holds in Apple, because this to me looks like it's in trouble. Okay, and lastly is the Qs, as you can see here. Q's getting hurt as well. 50-day moving average. But again, look, bull flag. Here's your flag pole and your flag right up in here. So again, guys, we have a lot of bullish trade setups that are happening in the ETFs, but they have not triggered yet. Okay, so we can easily just break down from here. So let's be patient. Take it one step at a time. Make sure you take the best trade setups. If you're counter trend trading, I would use a lot of caution and make sure you know what you're doing when you are counter trend trading. If you're a novice, just stick aside, stick with the trend, and take the best setups and use your stops. All right, guys, have a great day today, and we'll speak to you tomorrow.